Yeah, despite these solid numbers for the companies, we're not seeing much movement in the markets for the banks. We're joined now by John Zechner, chair and founder of Zechner Associates. For more on this, John, thanks as always for joining us.
Hey, Roger, good to talk with you.
We're seeing the numbers that people were expecting, maybe even better than what people were expecting, but we're not seeing a lot of movement. What's shaping that?
Well, that was to me the problem going in, and we had sort of lightened a little on the banks because I think the expectations was set pretty high here. I mean, the issue is the stocks are trading at basically all-time high valuations, and I mean, even on the dividend yield side, I mean, there's times in weakness in the past few years we've been buying these things at 4.5%, 5% dividend yields. Now they're all around 3%, and certainly you can find better than a 3% dividend elsewhere in the market. So they really had to hit the numbers sort of out of the park, I think, in order to justify those valuations and move forward. And so far, I mean, the numbers have been good, as you said, and as Ernest said in that earlier tape. I mean, certainly capital markets and wealth management were both strong, but where's the surprise there, Roger? I mean, we're in a bull market. I mean, capital
Hmm.
markets activity, of course, is going to be strong. You may not get a lot of IPOs in Canada, but you've got a lot of secondary offerings from metals companies and others. So that's going to obviously help the investment banking firms, wealth management. Markets are higher, and wealth management earnings continue to grow. So that's good. And on the loan loss provision side, that was a bit of a worry, or I thought it could be a worry because the economic data we've been seeing in Canada is certainly mixed to and more to the downside, especially from the portions of the economy on the real estate side and others, and what we've seen on the trade issues. And yet the loan loss provisions really did not rise. They raised, a minuscule amount at RBC, but at the others, they haven't. So I mean, we've got three more banks coming tomorrow, but typically 40 basis points, which is where the loan loss provisions are running right now. That's typical economic strength times. It's when you get into recessions, you see these things sort of move to 60 or 70 basis points, and so that'll be the big question going forward is where do the economy goes. But these things are priced, I wouldn't say for perfection, but they're priced for very good numbers. They got very good numbers. I think if I were to pick out the one that really did exceptionally well, and that is showing in the market, it was Royal, because they not only beat on the capital markets, they increased the dividend, they increased what their longer term ROE, rate of return on equity target is to 17%. And on the cost side, they brought them down substantially, which is key for the banks because you're running out of areas how you can keep bank growth going for the Canadian banks. And one way is obviously on the cost cutting side.
And can we expect similar numbers for the banks that are reporting tomorrow? And
Yeah, you know what
I know it's a
what I
big
see.
crystal ball on that, but I mean,
Yeah.
so goes one, pretty much goes the others.
Well, you're right, Roger, but there is a difference in the banks that are reporting tomorrow because the ones that came out today and even yesterday, particularly, they still have acquisitions they can help growth. I mean, look at RBC's growth. A lot of it is still because they're bringing in the HSBC Canada. You're getting the synergies from that. That's helping your growth, and obviously National Bank is benefiting from the Canadian Western Bank acquisition, and now they're going to get chunks of the old Laurentian Bank as well. So that'll keep them going. On the other side, I'm looking at TD, Commerce, Bank of Montreal reporting tomorrow. They don't have those same kind of additives in there. I mean,
Hmm.
and going forward, that's a bit of the risk. I mean, where does the growth come from? I mean, the U.S. had been a source for a while, but I started to look at the recent activity that Canadian banks have done in the U.S. and it's not been very good. We saw TD Bank failed to get Horizon, and maybe for because of the money laundering issue. Royal Bank was still sort of choking a little on the City National acquisition a couple of years back. Bank of Montreal had a number of bad quarters when they tried to swallow Bank of the West. So, if that's where your acquisition opportunities are, that's a bit of a problem because you're not
Yeah.
seeing, good ability to do these acquisitions and make them accretive and get through some of the regulatory issues as well. And we all know the relations between Canada and the U.S. have not been improving lately, which is another headwind there. So how do you grow? Do you grow you have to grow in Canada, and there's no more smaller banks to pick up. So that's a bigger question going forward. The growth has to be on the electronic side, and how do they do that? What do they pick up? Do they start to buy some of these new, the newer firms that are doing more electronic banking. Do you go after Wealth Simple and companies like that? I mean, that was the Canadian strategy in the past when, back in the 80s when they started losing out on on capital markets activities, they went out and bought all the brokers. And then the same thing on the money management side when they started not, competing as well, they went out and bought, the big money management firms as well. So, will they turn around and just do some acquisitions or try to grow it organically? I think that's the headwind for the Canadian banks right now. Valuations are high, and there's very few growth opportunities that I see, and that's why we're looking elsewhere. That's why I'm underweight the banks right now.
Okay, we're going to leave it on that note there. That was going to be my last question. What are you doing with them? You're underweight. John, always a pleasure, sir. Thank you for joining us.
Thanks, Roger.
John Zechner is chair and founder of J. Zechner Associates.